So today we're here with Dave Pettenuzzo. He's an insurance specialist with National Bank Financial. The reason we're talking to him is because people are unique, their family situation is unique, their business needs are unique, and there are lots of different options available for you to help mitigate the risks of the future with insurance. We're going to talk about a few of them now.
You brought up a cottage, for example. You've
Yes.
got the family cottage. It was bought 20 years ago. There's large capital gains, and the parents are getting older and wondering how that cottage is going to stay in the family. And they want
Right.
to retain those memories. They want to retain that place for the kids to be able to go there. So we might try to do a permanent policy on both of the parents, and sometimes we'll even have the kids pay the premiums on that policy.
Right.
And that way, at the end of the day, it allows the tax bill to be looked after so that property can stay in the family.
So let's explain that a little bit more clearly to our viewers, because sometimes when you say tax bill, I know what you're talking about, but maybe some people don't. So what exactly do you mean by tax bill? What
Right.
tax bill do you have to pay?
It's a very good question. So say they bought the cottage for $100,000 20 years ago,
Right.
and then they've had some improvements, the market value's gone up, so maybe it's worth $2 million now, which is definitely possible.
And it's not your principal residence.
Not principal residence, exactly. So they'll have a capital gain of $1.9 million.
Yikes.
50% of that will be taxable.
Yeah.
So that's $950,000, and that could grow in the future with the market. So we would look to put a permanent plan in place to cover off the tax bill. And the nice thing about insurance is it typically pays out tax-free.
And it pays out right away.
Pays out right away, bypasses probate,
Yeah.
bypasses the estate, and it can't be contested by anybody.
So if you don't have that, what options are the family left with?
They would have to build a pool up on their own to try to cover
Right.
off the tax bill.
Or if they didn't think about it, they might have to sell the cottage, which would be worst case scenario,
Right.
or scramble and try to come up with this tax bill that they weren't planning for.
Exactly.
Yeah. So this is why planning and working with someone such as yourself is so valuable, because we can help mitigate future risk.
Exactly.